Important key points of this lecture include: what is a financial statement? How to prepare income statement? How to prepare a balance sheet? Financial statements. A financial statement is a report that summarizes a company's financial position, performance, and cash flow. The financial statements are prepared in accordance with generally accepted accounting principles. Financial statement include: income statement, balance sheet, income statement. A statement, which is prepared to ascertain the net income or net loss of the business for a specific accounting period, is known as an income statement. How to prepare income statement? We are preparing an income statement by assuming figures. The amount of gross sales is $500,000, less sales discount $10,000. Sales return and allowances $5,000. $15,000 is deducted from gross sales. The amount of net sales is $485,000, less cost of goods sold. Now we calculate cost of goods sold. Merchandise inventory opening is $100,000. Add net purchases. The gross amount of purchases is $30,000, less purchase discount $2,000. Purchase return $3,000. The amount of net purchases is $25,000. Add carriage inwards with net purchases $5,000. Total delivered cost of net purchases $30,000 added with merchandise inventory opening. Cost of goods available for sale is $130,000. Less merchandise inventory closing $5,000. Now we find cost of goods sold $125,000, which is deducted from net sales. Gross profit is $360,000. Less operating expenses $50,000. Net operating income $310,000. Add other income $10,000. Less other expenses $1,000. Net income is $319,000. Key points of income statement. Gross profit equal to net sales minus cost of goods sold. Operating profit equal to gross profit minus operating expenses. Net income equal to operating income plus other revenue minus other expenses. What is a balance sheet? The balance sheet shows a company's assets, liabilities, and stockholders' equity. The assets are items such as cash, receivables, and inventory. The liabilities are items such as loans and mortgages. The stockholders' equity is the difference between the company's assets and liabilities. How to prepare a balance sheet. XYZ Company balance sheet is at December 31, 2022. Items within the current assets category are: cash $10,000, account receivable $20,000, inventory $50,000, prepaid expenses $20,000. Total amount of current assets $100,000. Items within the non-current asset category are: land $60,000, building $40,000, machinery $50,000. Total amount of non-current assets $150,000. Less accumulated depreciation $50,000. Total net non-current assets $100,000. Items within the intangible assets category are: goodwill $30,000, copyright $20,000. Total amount of intangible assets $50,000. The total amount of assets is $250,000. Items within the current liabilities category are: short-term loan $10,000, account payable $20,000, outstanding expenses $15,000. Income tax payable $20,000. Total amount of current liabilities $65,000. Items within the long-term liabilities category are: Bonds payable $25,000, mortgage loan $20,000, long-term notes payable $25,000. Total amount of long-term liabilities $70,000. Items within the stockholders' equity category are: common stock $100,000, retained earning $50,000, less treasury stock $35,000. Net stockholders' equity is $115,000. Total liabilities and stockholders' equity is $250,000.
If you like a video, then please subscribe to our channel and press bell icon for regular updates.